And we are alive. Good morning, crypto warriors, and welcome back to Gem and Crypto, episode 985. Today is Thursday, July 28th, 2022, and I'm King.
And I'm Bitcoin Zay, here to bridge the gap between cryptocurrency and the community, Monday through Friday at 10-ish.
At 10-ish, and today is a 10-ish day, but today's top story, 72 of the top 100 coins have fallen 90% or more. Here are the holdouts. NFT domains platform Unstoppable raises $65 million in the Series A fund at $1 billion valuation. Excuse me, I'm all over the words today. Coinbase SEC investigation could have serious and chilling effects, says a lawyer. Kathy Wood's ARK dumped $75 million in Coinbase stock. And I have Bitcoin for the benefit of my kids, says Gibraltar MP. But first and foremost, what is going on with those prices, Bitcoin's there?
Oh, yeah. So let's take a look at these prices today. Bitcoin sitting at 22,878, down 0.6% today. Ethereum at $1,622, down 0.75%. Binance Coin at 265 is down 0.8%. XRP sitting at 35 cents is down 0.45%. Cardano, right, a touch under 50 cents at 49 cents is down 0.9% today. Solana at 39.68, down 0.9% as well. And Dogecoin at 6 cents is down 0.83%. So not much movement in the top 10. Ethereum, Grove, and Green Satoshi token are all trending today. And some of the recently added ones include Monopoly, Millionaire Control, hilarious, Wallfi, and Project 202, which sounds like some dystopian token for when the aliens show up. So those are your prices for today.
There it is. There it is. Morning Warriors. What's going on? BK Crypto, Alipio, Bitcoin Man, 11 Super Mario, Captain G, Tikai, Junior Maley, Jake. Who else we got? Solar Goddess, JB, Hassan, Bitcoin Sean, Michael Jr., Michael Kennedy. Good morning, good morning, good morning. Like, taxes paid. Make sure you smash that like and share. KC, welcome to the chat. Ask the question. Top story of the day, 72 of the top 100 coins have fallen 90% or more. Here are the holdouts. Not a story you want to start the day with, especially after this couple of day break, but this is crazy to see. But it's kind of, expected, as we always say, that top, well, not necessarily top 10, all of them, but usually top 5 to 10 coins usually rotate pretty quickly. But it looks like the vast majority of cryptocurrencies have dipped more than 90% from their all-time highs, but a core group has managed to stay ahead of the pack. What is going on with these cryptocurrencies, and which ones kind of stayed ahead of the pack?
They're just getting their ass smacked, like always, with the bear market. Every bear market, everything outside of Bitcoin goes down 90 to 99%, and Bitcoin usually goes down about 80, Ethereum as well. So this is no different in any bear market. And the larger cap coins, like they say, they are faring better than most. Among the top 10, 9 have dipped less than 90%. Bitcoin is down 70, and then Ethereum at 78. So basically, it only dips at those levels usually in a bear market. And when it happens, you have a lot of coins that essentially go away for good. And the ones that are strong enough hold, even though there is a lot of rotation in the top 10 for the past, 7, 8 years, has been pretty much the same top 2 or 3. So in the top 10, though, Binance, Cardano, Solana, Polkadot, they're down between 68 and 88%. I believe sometime at the end of this year, we'll see one of those coins drop out the top 10 completely and never come back. Just because of the fluidity of the market, as well as the fact that if there is some sort of mini pump, or if there is an increase in price, some of these coins will not be able to sustain in the future, just because we've seen it. We've seen what happens. We've seen nothing being built, and that's the problem. If bear market happens and nothing's being built, that price is going to dip even further. So I also want to point out here, the best performer, and this is why you can't really pay attention to people that say, oh man, I made this percentage, I made this. The best performer there is Unis said Leo, which is only fallen 38.87% with aggressive buying at lower levels. I mean, whatever, but Leo is Ethereum based token for Bitfinex exchange. And what I feel like is happening is Bitfinex they turned on the bots, and they just kept the buying going. You got to.
Are you saying this is not legitimate? Is that what you're telling everyone? Is that what's happening right now?
I mean, it's legitimate bullshit. I mean, the bullshit, it happens with every exchange. So if you want to keep the price of your exchange token from tanking completely, there's ways to do that, and there's ways to pump money into it to keep it from falling too low. Again, CoinFlex right below it, Native Flex token, 83 largest. It's supposedly immune to the drop, only down 38%. I wonder why it's just exchange tokens that have the ability to sustain themselves over the time. Come on, people. This isn't rocket science.
It's the algorithms. Bitcoin Sean, have a question. How do we feel about Safe Haven for crypto inheritance? I'm looking for some type of decentralized protocol, or do we know of a better way to pass crypto down to the fam? So if that's an actual protocol right now, I would say just off the top of my head, most protocols are like really kind of embedded to me. So when it comes to inheritance, I don't know how comfortable I would feel in that long term. But I don't know, what are your thoughts on that, or is there a better way in general?
Oh yeah, well, right now the best way is still traditional, going through your lawyers saying this is my will, this is what I want to pass down, and crypto assets being a part of that. You would just have to provide the information for the access to those crypto assets. So what I would tell someone is, if you plan on keeping it long term, you keep it on a hardware wallet, keep it in a safe. If you keep it on paper, whatever you keep it at, you have to be able to provide the information for that before you pass. So make sure that's in your will, and that traditional way still works just fine. I've actually seen a couple cases where this has actually happened, and they were able to pass it down because they kept it on an exchange, and it was a little bit easier. But if you actually have self-custody, you got to make sure that stuff is in place so the crypto isn't gone forever.
There we go. There we go. All right. What else is going on? NFT domains platform Unstoppable raises $65 million in Series A at a $1 billion valuation. Woo! This is interesting. The company said that users have registered over 2.5 million non-fungible token domains through its platform so far. I know I was one of as well that did that. Looks like Wednesday, non-fungible token domains platform Unstoppable Domains announced that it closed a $65 million Series A funding round at a valuation at $1 billion. Notable investors in the deal include Pantera Capital. You hear that name often. Mayfield, Gangales, Alchemy Ventures, Red Beer Ventures, Spartan Group. So Polygon, that's a pretty good one. CoinGecko. Oh, CoinGecko. Shout out to CoinGecko. They're actually at this time, they're probably late 20s or early 30s, but they get their hand in a few different things. That's pretty cool to see. Draper Associates. But yeah, Unstoppable said we'll use the fresh capital to fuel product innovation and grow partnerships in the Web3 space. So shout out to Unstoppable Domains. Really cool. As many warriors did, went ahead and got those .eth domain names or Unstoppable domain names. Wait, is that the different? That's actually different than .eth, aren't they? Or is that the same?
Yeah, they provide those as well. They got .eth. They got a few different ones.
Do they have a few different ones?
Yeah.
Okay. Well, I know, like, once it went up and went out the door, but for the people who held on to it, this is kind of, to me, one of those proof of concept things, because the reality is like, you created a token on a website. Now, granted, it's attached to different things. I know that, and you can do more with it, and the longevity is supposed to be there also. But when it comes down to the root of it, again, so this is kind of proof of concept. You show you have community that has capital too, because you talk about gas prices; those things weren't cheap to go ahead and buy right off the bat. So shout out to them. But I think this is still showing that the crypto market is strong because people are still interested in things like this. There's still communities around things like this. But I think the valuation may be a little high, to be honest, because this probably was valued at this 8 months ago, 8 to 10 months ago, 12 months ago, maybe this would have been the valuation. But right now, where the market's at, where is that at this point? I don't know, unless they're basing it off the bottom, saying, hey, we're going all in at the bottom, and once this thing turns around, this will be the premier place to get your NFT domains. What are your thoughts?
Oh yeah, well, I think it's a couple factors here that factor into this valuation. One, being scarcity. The fact that there's only a certain amount of domains that you can register. Now, there's millions, of course, but the really important ones, a la zip codes, common names. It's sort of like buying pets.com back in 92. You know what I mean? Like certain common things that people have in the new Web3 communities, they're going to be owned by somebody who's probably not going to give it up for years and years and just going to sit on that digital real estate. So I think they see it as part of the fact that in the digital economy, People will own their identity, as he states here in this quote, and as well as the fact that whenever you want to send payments or if you want to do business, usually somebody will have either .eth, .sol, .btc if you use stacks. And of course, this is user owned, is private, and you can do whatever you want with it. So I think it's a novel idea. I do see unstoppable domains being around for a while because their main goal of their company doesn't involve speculation. They have a set price, you pay for it, you get it, and a lot of people are trying to accumulate as much as possible in the middle of a bear market. So I think you're right. They're seeing here at the bottom of the market, people are still actively buying domains because they want to sit on it for as long as possible. And if you don't already have your own first and last name .eth or .btc or .something, you might as well get it now. And if you want to sort of play the domains game where you just buy a bunch of them and try and see if it'll generate revenue in the future, because I know it's a lot of people, they're buying like a bunch of metaverse, like everything metaverse they can. They're trying to get metaverse this, metaverse one, something metaverse, whatever. Things like that, looking towards the future. So I think that would be this valuation is a little high, but at the same time, I mean, 65 million is a good raise for Series A.
Well, you know, I thought about it in that short amount of time where you're speaking. Of course, I thought about the possibilities, and I take it back that quick. One thing I forgot to even consider, of course, we just, I skimmed over it, start talking, was the regulatory side. If they do bring a regulatory side into NFTs, then yes, this is worth way more than $1 billion, because now, hey, this is one of the AAA centralized places or whatever that you can get your domain at. This is where you can store this and it's safe. It's already been blah blah blah. You can get insurance on it. Who knows? The possibilities are endless. So the derivatives market could definitely go crazy, and 1 billion could become paltry, as you would say, for that one.
Mm-hmm.
All right, Coinbase SEC investigation could have serious and chilling effects, says a lawyer. And at the same time, it looks like Cathie Wood's ARK dumped $75 million in Coinbase stock. So what's going on in both of these stories are kind of coinciding with each other. You hear about ARK a lot in the news. So to see, I mean, it's crazy to see them dump the stock. I kind of want to know what their entry was and what they made out with. Did they make money, lose money? What happened? What's the details of the story?
Oh, yeah. So they are actually the third largest shareholder of Coinbase, which is why this is huge news. They were holding nearly 9 million as of late June, and they have dumped a massive amount of shares as regulators reportedly probed the firm for alleged insider trading, which we discussed before. Again, when did when did that happen? Bcash 2018.
Yeah,
they're
2017, 2018.
They're just now getting around to insider trading. And he openly admitted to it. So it's 4 years later. And for some reason, again, the talks have really, ratcheted up. So I think that was a signal to Cathie Wood. Maybe we want to step away a little bit. This might have some legs. And they sold a total of 1.4 million Coinbase shares, according to daily trade information from ARK. The sale involved 3 ARK traded ETFs, including ARK Innovation ETF. That's 1,133,495 shares, or 0.6 of their total assets. They also sold 174,611 and 110,218 coin shares. So based on Tuesday's closing price, the value amounted to slightly more than 75 million. And look at the price that Coinbase stock closed at, $52.90, losing 21% of value amid the sale and showing some signs of revival, quote unquote. But what was the initial valuation? I believe it was in that 300.
It was like 3 something. Oh, 350.
Yes, the original stock opened at 350. So if you want to talk about insider trading, here's the thing: if you are privileged enough to have the money to invest early on, you are an insider. That's basically all that means. And people like Nas and other early investors, they were able to sell at the very top, and then, like we said, they're going to dump on retail. And unfortunately, I think for ARK, they got a little too hype about being able to buy it when it was down at like the 100 levels and being able to purchase more, because they're like, oh yeah, we're going to hold it long term. However,
is that when they purchased it? Pardon me.
I believe so. Yeah, I believe it was when it was on its way down. And they were like, oh, well, if we're holding it long term, all we need is for it to basically get back to where it started, and we would basically triple what we have. The problem is you can't hold it long term if there's no company to hold. If there's if they have an insider trading tip and the Department of Justice goes after them, that could all go away. So this might trigger some other top investors to do the same. Who knows?
What's crazy is I'm actually, okay, there we go. That's the big one, because at first I was like, dang, the U.S. government strikes again. They said the insider trading was for 7,000 in profits, then 13,000 from something else. I mean, which included like ENS, which we were just speaking about. And I'm just like, wait, is there a $20,000 insider trading article and subpoena outgoing? And then I saw the 900,000 from XYO. I was like, all right, now that will get Uncle Sam's attention. Now the 20,000 you could have just skirted with, but you get 900K. Uncle Sam didn't get that. Okay, come on now, getting crazy, getting a little crazy. So yeah, and it gets to about 1.1 million in gains. So yes, that definitely breaches the gentleman contract that the government has with private companies out there for the most part. But no, it's crazy to see that this is happening when you see Cathie Wood and something as big as art, because I'm going to go back to it. I remember when before Coinbase even went public, we said they would go public. We started throwing valuations out there. I think the first valuation we ever had was between like either 10 to 12 billion or 12 to 14. And then like as the year went on, they started adding more products, more things, and more value. We were like, all right, 18, and then it was like, all right, 24. And then when I started hearing the numbers, it was like, all right, like 42 max. And then when 100, at first it was like, I think 60 came out, and then like it jumped to 80 and 100. It was like, okay, whoa.
Hold your horses.
So again, this is what's always crazy to me. These people are making the big bucks. How do they not see this? How do they not see this? This is crazy to me. Like, and again, we know institutions that went into it. And this is like Circle and Poloniex should have been the lesson learned there. And again, shameless plug, you can learn about those things in the masterclass and how it applies to stock decisions. Because if you knew about Poloniex and Circle buying them for $300 million, and we covering that on the show saying that this is a terrible buy. Why? Because things like the troll box, like our chat box here, have been shut down on Poloniex in order in the effort to send those moderators to actually use them as support for the exchange. Who knows, they actually robbed the place or not. But I mean, seriously, you give them the keys to the kingdom. A bunch of people you met on the chat box, you give them keys to the kingdom. But they bought it once the volume was like at all-time low. No one had used it. Everybody went on. And then it just died down. The CEO eventually had to resign, and he was just a board member. So it was like Coinbase was the exact same play as the Poloniex and Circle thing, and it's like they bought right back into it. Just bought right back into it.
And you know what's funny? What's funny? I think some of these crypto companies might be pulling a reverse on these investors. You know how these investors basically shark them out and give them less money and basically use it as a way to make profits. They might say to themselves, we can build a product, convince them that there's going to be this huge wave of customers that are coming, and get a super high valuation and sell it and get out scot-free, which they did. Circle was one of the dumbest purchases ever. Before Do Kwon, before Terra Luna, and before some of these other Coinbase or whatnot evaluations, Poloniex was one of the worst buys I've ever seen. They got rid of, because I used to be on there in 2013 when it was real DGen life. It was like literally 2,000 people in the world on the website at like 3 a.m. So it was literally the gen, like you said, the troll box, the lending, where you could lend out. They took all the good stuff away, and then Circle bought it, and I was like, that's terrible. It's literally like buying a car, and then they take off the rims, put on some hubcaps, they change out the V12, put in the V6. They take the radio out, and then they offer it to you at a higher price, and you still take it. So just because it's got a nice car wash.
And they don't put a manual, and they don't even put a manual in there.
What to do once you got it. So one of the worst purchases ever. You're right. The reason they don't see it is because I think their consultants think in a legacy mindset, and they're like, well, if we just go ahead and snatch it up, we can have this digital real estate and we hold it long term. What they don't realize is 99% of all these projects and all these exchanges is going to be gone. I think it's going to be a big clearinghouse over the next 4 to 5 years as we become more mature. So they were just buying, in my opinion, this is dumpster diving in their world.
So a couple of things. This is why I'm always excited about being in this industry. And you know how we speak in private, like it's never really a crazy rush to make it to the top of the mountain, because people like when the door opens to where they're like, all right, what do you got for us? Because when I think of things like Polonia, we could talk about this one since it's kind of over, but not really. The story's still going. It's still an exchange. It's just like they did it all wrong. It was already dead as the cool kid exchange. They should immediately pumped up the gears to being the next Coinbase. Coinbase gets 100 million valuation, 100 billion valuation. You guys should have slid in literally a month, 2 months later at least 30 billion. But no, you fumbled the bag. Like you literally, that's how you turn your 300 million into billions. But no, what did you do? I don't even know what they did. It sat on it, then they was trying to still be the cool kid, and then be centralized and KYC AML. Was like, oh, okay, you're lost in the sauce. You don't know what you have. So that was unfortunate to see. But the second thing is, I saw one of our reviews, somebody said like negative, we're too negative, whatever. I'm like, listen, I understand, but no, I do understand because again, shout out to the yield. I was just on their podcast. They aired that yesterday. It was pre-recorded, but they aired it yesterday. And it was just like, I was trying to tell them, I was like, I'm not trying to be doom and gloom or nothing or negative, but I'm just like, look, like 99% of these projects are going to be gone. They're not good. But I was like, I get it. If you're just here for a quick pump and dump, you just want to catch the top and try to sell it. And then, you can look at these things to consider. But hey, we have to put on the PR hat right now. We cannot be negative Nancy's and doom and gloom. We're not going to say they're going to be gone or they're going to be die out or nothing like that. They're going to consolidate. That's all that's going to happen. In 99, listen. I told you, I used to do this work, baby. Listen, on top of here. All right, look. All we're going to do is consolidate these projects. So what you want to do right now is, you can, have fun in the market and find some things, but just know those things you find will more than likely be consolidated as other projects kind of, start to adopt the same practices and protocols and things start to expand at one place, one centralized place. So that's all that's happening. Things are going to be consolidated. This is a good thing for the market. The great thing is we'll go from 18 to 20,000 cryptos overnight to probably less than 300 to 400. And then it'll be a slow growth back up again to the next best thing after that. But it would definitely consolidate.
It's not, your project won't die. It'll just consolidate.
It's gonna consolidate. Yeah, I'm sure it'll consolidate. That's gonna be so nice to just sneak it in to people when we talk now. Reggie, shout out to Reggie Middleton. You all know you can catch him on Wednesdays. Of course, he's put out his Coinbase report. He said that we discussed the many holes that he's found in Coinbase and Circle, particularly Coinbase. Not yet, Reggie. I gotta dive deep into the report. We've been project building on the back end. But I'm definitely going to take a deep dive. Make sure you guys check out that Coinbase report and let us know in the comments what you think from Reggie Middleton's report. I know he'll be going in detail with it in addition to it next Wednesday. All right, what else do we have going on in the chat? Let's see. Consolidation into a CBDC. That's hilarious. We are stronger together equals centralized. I like that. We are stronger together. That's going to be our code switch for centralization. All right, last story. Maybe. Last story there. I have Bitcoin for the benefit of my kids, says Gibraltar MP. What's going on with the Gibraltar MP?
Okay, so if you don't know about Gibraltar, located in Europe, southern tip of Spain, the British overseas territory of Gibraltar is a bubbling hotbed of cryptocurrency adoption. And in an interview with Cointelegraph, Albert Isola, who's the Minister for Digital and Financial Services for Her Majesty's Government of Gibraltar. I love governments like that, where they still say Your Majesty. They explained the territory's approach to crypto and shed some light on his own investment interest. And when it comes to Bitcoin, he basically said, I'm not at the stage yet where it's something that I'd use on a regular basis. It's more about buying some for the benefit of my kids in the years to come. I don't touch it. And let me give this man a hand. We got to give this man a hand clap. Give it to Isola, because I've been saying it for probably the past 2-3 years now. The reason why I started focusing on kids outside of having a daughter was that when you look at the industry and how long some of this stuff is going to take to be built out and to see it at the point I see it in my head, it's basically going to be the kids doing it. When I'm 50, 60, 70 years old, I'm definitely still going to be involved because I think this will be the money of the future. But the new innovations and the projects that will take off sort of like today, it's going to be your kids and grandkids that really take advantage of this and go forward in a world that they lived in, that there never was a world without Bitcoin or without crypto. So it's going to be much different from their views rather than us. It's sort of like it's sort of like our generation, King, how we have technology, but we saw a world before that. Like we knew a world without cell phones and computers being in our life. So then once it came, we had to learn it. It's cool. But if you grew up in a world with phones, I don't know what it's like to grow up in a world without any phones at all. But there's people like that. They were like, I remember when there was no phones, there was no rotary, there was no. So it's always going to be different generations. And I'm glad he said that, because that's what you should be thinking. And if you are using it currently, I know there are some people that need to use it around the world, especially if you don't have a bank or if you have an emergency. That's good for them. But you should be thinking like this. It should be for your kids or for your future generations, definitely. And he doesn't touch it, much like myself and much like other people. Just don't touch it. It's very easy, but it's also very hard. So shout out to him.
Yeah, shout out to Gibraltar. That's pretty cool to see him kind of take that stance, especially knowing what's going on in the international scene where a lot of people have been outspoken against it. And the old school club, you know, where they got everything where they kind of want it at already. But again, that's pretty cool to see as well. And yeah, another looks like another country might be flipping over to the other side. All right, so let's see what happened to the soundboard. The soundboard is still there. I don't know. We haven't had a real reason to say a lot of use a lot of sounds, but hold on. Did that come in? Did that come in, Zay?
Yeah, it's so good.
That was loud as I don't know what in my head. Goodness gracious. Let's see. Oh, are we accepting sats on the Fountain app? I do believe so. Shout out to Alec. Alec usually holds it down. He's laughing right now because I just did soundboard. So check that out. Shout out to Casey. In week, I hope I pronounced that right. Pardon me if I didn't. For the tip, says Zay, reach out to Chuck. Holla at Chuck. S1 Dubs. Publicly traded companies have a daily, weekly, monthly performance evaluation time frame. Crypto has a 4-year cycle time frame. Corp shareholders don't have the stomach nor patience for the crypto market. Yeah, I mean, again, we talk about that. They're always looking quarter to quarter instead of kind of looking more long term. I mean, listen, when you're public, you're the Lakers, man. You need to win and win now. Young core, you out of here.
Brandon Ingram, Julius Randle,
yeah, all that 3, 4, 5 years. Listen, I'm all here for the young core too, but this is crazy. It was crazy. All right. Other than that, Bitcoin's there. You got anything?
Nothing from me. Just check us out tomorrow for FBF. Everybody be in attendance. If you got some smoke, call in. But other than that, no.
Let us know. Let us know. Than that, make sure you check out the masterclass. Check out the masterclass. Got a lot of good stuff planned for you. I'm planning to be at NFT LA right now, beginning tomorrow. So if you are out in LA going to NFT LA, let me know, and hopefully I will see you all out there. I may be doing some streaming out there as well, so we'll see how that shakes out. Waiting for some more gear to come in. Other than that, smash that like and share. We'll see you all tomorrow. Cheers.
Cheers.